Now, for this very first panel discussion, we have for our moderator, Mr. Adrian Chng, founder and chairman, Singapore Fintech Association; Hayden Hughes, co-founder, Alpha Impact; Henryk, head of institutional sales, Coinhako; Marouen Zelleg, director of growth, ConsenSys; and Timothy Tan, head of sales and marketing, Cactus custody, Matrixport. Let's welcome them, shall we? A round of applause, everybody.
Thank you for sharing your time with us. I'm very pleased to introduce a fantastic panel to talk about Science of Spring. So briefly, I'll ask Timothy on the side. So four things that we're going to ask our speakers. Obviously, name, company, your role, but also what would be your ideal superpower if you could have one. So over to you, Timothy.
Thanks, Adrian. Right. Good morning, everybody. I'm Timothy. I manage sales and marketing for Cactus Custody. We are the institutional custody arm of Matrixport Group. And if I have one superpower, I'd probably choose time travel. Right. So I think time travel is pretty great, unless we do some small little event and we cause doomsday. Right. If not, I think time travel, being able to look into the future, go back into the past to fix things would be pretty good. Yeah.
That's good. Hi, everyone. Thanks for making your way this morning. My name is Marouen. I work with ConsenSys. So for you who don't know ConsenSys, maybe you know MetaMask. So MetaMask is a product from ConsenSys, and I hope you all have it installed. No other wallets. We also do a bunch of other things at ConsenSys. So we have developer tooling. We have launched recently a blockchain called Linea as well that I invite you to experience and try. And what I do for the company is essentially connect with projects and understand what people are building and then see how we can support them with our tooling and infrastructure. Superpower, yeah. Well, when I was a bit younger, I think superpower was super strength and not feel pain and everything. I still have the same wish, it's just not to feel pain when I wake up in the morning. It's just like it's getting very tiring. I think that comes with age. But yeah, so generally being healthy and not be, stiff everywhere.
I think I can empathize with that. Anyway, hi, good morning, everyone. My name is Henryk. I am heading the institutional desk at Coinhako. Coinhako has been around for almost a decade now. Prior to my taking over, it was primarily a retail exchange. What I do there now is I engage with higher value clients, private clients, institutional clients, family offices, funds, etc., who are looking to access crypto. Naturally, they need more white glove service and better pricing. So that's what I do. As for my superpower, quite simply that of multitasking. I think I can get a lot more work done. My wife would be happier, my son would be happier. So if I could multitask, I'll take that. Thank you.
Hi, my name is Hayden Hughes. I'm the co-founder of Alpha Impact. Alpha Impact is a social trading platform. And what that means is that our users can copy the trades of experts. We like to believe that there's some people in crypto who are experts, and we believe that there are some people in crypto who are not experts, or some people that just like to be lazy. And so the philosophy we have is that the people who are experts deserve to share what they're doing with our users. So our users have the ability to copy the trades of some of the top traders. We have people that have made money over the past month. Oh, sorry, this is a sales pitch, but I'm almost finished. So we have people that are consistently making money, and our users can copy their trades actually without making any deposit onto our platform. So it's a non-custodial, safe way for people to be able to copy expert traders. Philosophically, I think my superpower, it's something I've already unlocked, which is helping people make money in the bear market. That's on alphaimpact.fi. That's what we do. So thanks.
Thanks, Hayden. So, and myself, Adrian, I'm the founder of Fintonia Group. So we're a Singapore and Dubai licensed fund manager and wealth manager, and we focus on crypto and digital assets, as well as some traditional assets as well. If I had to choose a superpower, for me, it would be teleportation. I think it would be really nice, instead of getting on a plane and traveling 15 hours to Europe, that I could just snap my fingers and be there. Maybe in the metaverse one day. But okay, so we have, as you can see, we have a great panel, a lot of experience, so we'll kick it off. So the first question for the panel is, what do you think are some of your biggest learnings from 2022? And where do you see the opportunities in 2023 coming out of 2022? So I'll open it up to the panel.
Yeah, I can go ahead. So through the work that we do at ConsenSys, we see a lot of projects and a lot of innovation happening in the space. And I think one of the biggest learning is the fact that certain innovations and use cases were great in principle, but the technology behind was not there to support it. And so this is where potentially the consumers get impacted a little bit, where you see certain products that are just great and they make a lot of sense, and then you try them out, but then, hey, they don't scale, or the fees are a bit too high, or whatever. The game longevity is not long. So we've seen this a couple of times. I think there was a big successful experiment somehow in the GameFi space. We saw a lot of games actually growing into the 2021 and 2022. Now we have learned a lot from it in terms of sustainable token economics and the fact that the game has to be fun for people to continue playing it. So that's probably something you will see put into place into this year, next year, with more examples coming out. We've seen a lot of actually interesting DeFi movements as well, but then there was some limitation in terms of user experience and having people not being able to on-ramp, not being able maybe to set up a wallet, to keep their wallet safe. There is a lot of learning happening there, and then you will see into this year, next year, a lot of innovation coming out to make that user experience seamless, where you can set up maybe with even an email address, a wallet, and start trading. Obviously, the elephant in the room is centralization versus decentralization. We've learned a lot from, let's say, false profits or unsustainable business models where you go and invest all of your money into an exchange or into a centralized service and essentially trust a group of people, whereas blockchain is meant for a trustless ecosystem. So there's a lot of learnings coming from that, and we see now an increase in transaction in decentralized finance and decentralized applications. So as I see in blockchain, and this is probably happening with every bear and bull cycle, there is a set of experiments, and we take some learnings from them, and then we come with a better, improved version after that, that will onboard safer transaction, more transactions, and obviously people who are really appreciating the technology.
Well, very interesting. I see. Maybe Hayden, you want to comment there?
Sure. Yeah, not completely connected to what you've said, although those comments were really good. I think one of my lessons in 2022 was counterparty risk. I mean, if we'd been doing this panel a year ago, maybe a little bit more than a year ago, no one, if you had asked me who is the most trusted exchange that you trust with your money, I would have said FTX. And I think if you look out in the trading community, the breadth of products they had was just unparalleled. So it was the best derivatives marketplace with the most liquidity, and so I think the lesson that we've all had to learn is that the assumptions we make around trusting institutions need to be questioned. Another thing I think psychologically is we have this bias that when it's a bull market, we think that we're right. And, I bought Bitcoin at 30 and then it went to 50 or 60. You have a bias to listen to the people that say it's going to keep going up. And there's a very small number of people in the bull market who will be saying things that are very sensible, which are actually, well, this is not going to last forever. This is a good time to take profits. This is a good time to hedge. You should be getting out a little bit. And I think I've learned that I need to listen more closely to those voices, because what goes up must come down and what goes down must come up. It's very easy now to listen to the people who say that the worst of the bear market is over and we're going to see a recovery to 45K this year. Because I'm biased to believe that crypto will go up forever. So we have these psychological biases that are, I think, really important. And the trust assumption needs to be really questioned. So that's my kind of postmortem.
I feel quite personally attacked.
Coinhako is one of the good ones, and I don't think anyone should distrust them. They're awesome.
So no, on that note, I think Hayden, you hit the nail on the head. For those who weren't too familiar with what happened in 2022, it's very fresh in my memory. So I was at Credit Suisse for 7 to 8 years in private banking, and then I left to join crypto, right? And the very next month or 2 months after, you had the whole Luna saga. and then the whole domino effect of everything else came crashing down. And that was my baptism through fire in crypto. Basically, a confluence of macro, geopolitical, and economic events started weighing down on pricing and liquidity. And the general insouciance of regulators across the years culminated in what we saw, which was the complete unraveling of the industry, right? But regulators are now paying attention. But the jurisdictional turf wars and the wrangling over definitions are still leaving gaps, right, in regulators' oversight. And this is constantly being exploited within the industry. So, kudos to what decentralized platforms you're building. But the personal takeaway for 2022, the biggest takeaway for me would be that the need and importance for self-regulation. Without the training wheels and the guidance of a mature industry and our regulators, we're forced, right, to enforce our own robust guardrails, risk management, so that we ensure the continuity of our business. Right, it's very easy for us to tell you, hey, we're Coinhako, we've been around here for 10 years, trust us. But you never know. Markets, cycles, they're very violent. Some firms are not circumspect about the risks. We choose not to take risks. That's why we don't lend. That's why we don't have margin trading. Yes, we lose out in terms of profits here and there, but at the end of the day, we're still alive, right? Apart from that, fiduciary duty, our staff operate with a deep sense of fiduciary duty. We have internal governance standards that ensure the preservation of our own business interests, right? Which ultimately, at the end of the day, is the safety of your assets. And as for opportunities for 2023, I guess greater clarity on regulations. And the fact that the market has shaken out a lot of the weakest players in 2022. Hopefully, with a more conducive macro environment in the next year, we might see more meaningful participation from institutional players in the next couple of years.
I mean, I see a few themes here. We've talked about decentralization, centralization, regulation, counterparty risk. I think Timothy, coming from a custody product, I think custody now would be a much higher profile, higher in people's mind share. I mean, what are the lessons that have come out for you from 2022, and how has that impacted your custody approach?
Right. I think Henryk mentioned a point about self-regulation. I think through this whole 2022 cycle, where we saw first the implosion of Terra Luna, and then 3AC, and all the lending platforms going down, and post that FTX, I think regulators are sitting up and starting to wonder, is self-regulation enough, right? And is leaving institutions to self-regulate, them taking on as much a risk as giving a stamp of approval, right? So I think over the next couple of years, we would see regulators step up to regulate this space instead of going down the self-regulation route. On the custody front, right, we mentioned a lot about counterparty risk. And counterparty risk is not just you lending your money on a lending platform, right? FTX showed that if you do not have a proper custodian, if you do not invest in proper self-custody infrastructure, equally you are taking on as much of a risk as lending it out. So I think institutions today demand a lot more visibility, a lot more transparency. And institutions who are serving this space, who can provide this need, would stand to benefit, and that's an opportunity for this industry. From the custody front, transparency is really at the core. I think most institutional custodians today, the way that we are set up, we provide segregate wallets. Users are able to verify their funds on-chain at any time. When we look at regulators, and Hong Kong is regulating, Europe is regulating, and some common themes that always come up is segregation of client assets, segregation of between clients and themselves, right? So I think institutions who are able to catch on this and use institutional custody as, for example, off-exchange settlement, to do staking, so on and so forth, have a much greater chance of capturing the investor market going forward. Yeah.
It certainly seems after 2022, there is a need for regulations. Governments are stepping up. Now we've seen in the last 2 days, the SEC sue Binance and also now Coinbase. But we also see Hong Kong now release their legislation regarding digital assets. Dubai have been very active. How do you see regulation impacting how we operate as an industry in 2023 and beyond?
Yeah, this is a really important point, and I think the reality is, I think all of us on this stage are in favor of regulation. You know, if you went to conferences 5 years ago, you would have been hearing people talk about we're building all this infrastructure, so we don't need regulation. But I think what the past several years have taught us is that the space will be stronger if there's a set of rules that we can all play by. So the Hong Kong example is really interesting, and I think what they're really clearly trying to do is make Hong Kong a hub again. Obviously, Hong Kong, you know, going back, there were protests. It was locked down for COVID for like a year longer than the rest of the world. Really tough times. So Hong Kong is really putting up their flag and saying, you know, we're going to make a set of rules. It's going to be hard to abide by them, but we want to make a path. And I really applaud the Hong Kong regulator. They haven't had the scar tissue that Singapore has had from some of the notable companies here. Obviously none represented here on the stage with me, but there have been some Singapore companies that have been in the news. So I think really exciting to see that the Hong Kong government is coming forward. In the US, I think it's a little bit tricky, and I think it's really popular to criticize the SEC and to say that, well, Gary Gensler is overstepping and all this stuff. But you have to understand that there's a very, there was a lot of, I'm not going to use any swear words, but a lot of, let's just say, you know, funny business happening in our industry last year. A lot of people lost money over things that would have been preventable if there had been a really clear set of rules. In the United States, there's not a clear set of rules. They have this like statutory thing that doesn't exist. So the SEC has had to make up a set of rules because the Congress is so deadlocked, they can't pass rules. So I understand where the SEC is coming from. I don't agree that Coinbase should be the target of their investigation. I think that you know, they're basically taking a shotgun approach. Let's try to stop everyone no matter where they are. And ultimately what you're going to see is the US exchanges, you know, Bittrex, Coinbase, Gemini, the others, are going to do exactly what Binance and all the other exchanges have done, which is going to be, they're going to have this entity in the US facing the US, and then they're going to have most of their business outside of the United States. So I think it's really important that we try to align as an industry around the need for regulation. And that regulation needs to come from different governments. Give us the rules and we'll play by them, I think is the mantra, because in an environment where there's a lack of regulations, it kind of hurts everyone, because you create an incentive for companies to go around and say, well, if I go to this country, I don't have to abide by those rules, so I'm going to set up my company there. And then you ultimately create a framework which kind of exists today, where people can end up losing money because, oh, that platform didn't have to be regulated. So I think ultimately it's a good thing, but we need to get regulatory clarity.
Can I just ask then, because regulations are based on, you know, regulations and laws can only be developed after things have happened, typically, because we can't think in advance. But now we think of just technology. So if we talk about self-custody, and now having self-custody and not necessarily moving your assets to a central authority, is that a solution? How can the regulations take into account some technology solutions? I guess Marouen is interested in your view from ConsenSys, because there are solutions from a tech perspective that don't quite fit traditional securities and other rules.
Absolutely. So one of the major efforts that we do at ConsenSys is actually trying to speak to the regulators and clarify that in this space, in this crypto space, there is probably two big parts of it, right? There is money crypto and there is tech crypto. Now, obviously in tech crypto, you have a lot of companies who are building technology frameworks and tools and wallets and, you know, networks and protocols that are aiming to solve real issues in our world. For example, sending money from A to B without having to go through intermediaries, or being able to own certain things in this world of metaverse and digital ownership. Unfortunately, most of the projects that are building in this tech space, they do either serve a money crypto aspect or they have themselves a money crypto aspect for different reasons, for raising, for ownership of the company itself. And so this is really where I sympathize a little bit with the regulators, because it's not easy to really separate these two camps, but also to be fair to both camps, it has to be somewhat separated. Now, what we are seeing is that there is a lot of effort from the regulators to go after the money crypto, but because of that, you have the tech crypto part being amalgamated in it and tracked into it. And this is where it becomes even more complex, because with, let's say, tech crypto, you're really looking at broader job markets. You're looking at developers, you're looking at builders, you're looking at different, actually, industry of supporting functions that will be impacted. And so, for example, if you take the case against Coinbase and Binance in the US, potentially what will happen, there will be a shrinking in terms of the consumer of those platforms in the US. Perhaps they will go somewhere else as a consumer, or you will see just the business model changing to those ones. But then also a lot of the innovation, a lot of the building from the technology side is being built by architects and engineers in the US. So what will happen to that? What will happen to that job market? And that ultimately will also contribute to the economy of the US on a larger scale. And so our role, at least from a technology company, is that we will continue educating why this technology needs to exist and how technology is different from the financial aspect of it. And if there is a way to allow one to thrive without putting the users in risk, or without putting the investors, let's say, and the people who want to participate in the economy of crypto at risk, we'll try to find that path. But it's not an easy problem to solve, because it's really branched into multiple aspects of people's lives.
Sorry, and I mean, this is always the challenge, and I guess I look at custody as one of the aspects which tries to bridge both the technology aspect, but also the monetary aspect. How do you see regulations impacting your part of the world, Timothy? Yeah.
Yeah, I think just to add on to Marouen's point, right? I think regulators have two options, right? They can either choose to focus on regulating crypto and tech, which is incredibly hard to do, right? I think today nobody knows whether a cryptocurrency or digital asset is a security, it's a commodity, it's intellectual property, so on and so forth, right? I think what would make sense for regulators to do going forward, it would be to regulate the entities themselves, right? To regulate risk-taking, to regulate the way they custody assets, they hold assets, the way they manage the operational risk. These regulations can be borrowed, right, from traditional finance or existing frameworks that we already have. Post the whole FTX 2022 and looking into this year, we saw regulators moving in two directions, right? We saw in Asia, obviously Hong Kong has come up as one of the strong leading contenders here. Even Hong Kong collaborating with Dubai in a cross-jurisdictional kind of a regulatory framework is something that I think would be a benchmark, right, or something good for the rest of the countries to follow. If you go on a witch hunt, or it may not be a witch hunt, but if you go in the line of enforcement, right, where if you have a couple of companies that do not understand the regulation, do not understand what to apply for, what licensing to obtain, and you go after them, I think that would actually serve to set us back as an industry, right? So I hope that jurisdictions in the regulatory space will go down regulating risk, operational risk, instead of focusing on crypto and tech itself. Yeah.
Just, I mean, regulating entities is very traditional. I mean, it's the way the world works. But when we start thinking about protocols and smart contracts providing certain functions, how do you identify who to point to, who to regulate? So
it's extremely difficult, right? And so I think also like the persona of the regulator and the level of understanding of the technology is also a blocker, right? You've seen a lot of for example, the Senate hearings where you have a head of a company explaining TikTok to a senator or explaining AI to a senator. This is really one of the real challenges. And blockchain smart contracts in itself also is still evolving quite aggressively. And so, for example, I'll take a very, very simple example. There is certain governments where they're looking at the transfer of digital assets and saying, well, if you're going to do a transfer more than X, let's say $500, you have to declare where is it from and who's going to and announce this. But now actually you're seeing innovation where you have NFTs that can hold a portfolio within them. Or for example, instead of sending you the actual 500 USD, I can send you an NFT worth $500. But it's only worth that today, and tomorrow you will take. So technology itself is evolving in a complex way where you have regulators sitting in a room trying to understand what is the state of technology today, coming up with a set of rules. But then there is new innovation in terms of the smart contract or in terms of how the transfers between assets work. And then that whole set of regulation is gone. So, for example, regulating the operational model and the risk is a way, perhaps. Regulating the technology itself is a bit futile, in my opinion. We've seen this before, perhaps with torrent streaming, with the early days of the internet. It was a bit harder to regulate the technology itself, but then we made sure that when a company has users and handling their data, it does not exploit that. It does not transfer the data out. So there is maybe surrounding properties that can be regulated, but regulating the smart contract level and the protocol, I don't personally believe it's possible.
Yeah, it's certainly difficult. As one of the very first Singapore licensed entities with a DPT license, how do you see regulations evolving, and how has that changed your business, Henryk?
I think it's fortunate that we've been focused in Singapore, and we continue to remain focused in Singapore. We have had ambitions. We've looked to Europe, we've looked to Asia. During the bull market, we had many ambitions, but we have scaled that back. We're looking closer in the region. But like I said earlier, and like Timothy pointed out, all of us pointed out, all this, like I said, jurisdictional turf wars. There's no clear, cohesive regulation yet. So what that means is it's just a lot of work for us, right, to really work out whether it's a commercially viable pursuit. Most of the time, it's either unclear or it's just not really worth our time. So it does make things difficult. All I can say is what we're hoping for right now is at least that Singapore and Hong Kong remains committed, right, towards innovation and growth in the sector, in the region, so that, there have been a lot of people, talented people who have left their respective industries, finance, tech, engineering, and they've all migrated to crypto. Everyone's hoping to contribute to a new economy. I came out, right? It was so difficult for me to leave Credit Suisse after almost a decade, right? Being there as my first job since I graduated. I came out, and I came out into a world that was burning, right?
Your old world's still burning.
Isn't that fun?
Maybe it's burnt.
Credit Suisse is gone, by the way. So, and in hindsight, it was a very good move. But yeah, to my point, as long as Hong Kong and Singapore can continue to commit to this, we can continue to build. And I guess whatever the market does in the short term, it really just it doesn't. It's secondary to us, right? Hopefully, there'll be more, like I said, clarity in the next couple of 3 years, 4 years, 5 years, 10 years.
Certainly from Fintonia perspective, we're licensed here in Singapore and in Dubai, and there is a convergence of thinking and of what regulators want to do, which is protect the retail investor, have market integrity.
Yeah, the Consumer Protection Act is very, 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 very strong.
Yeah, so they're beginning to move that way. So we spent quite a bit of time talking about, I guess, in Marouen's terms, money crypto, which is obviously plays a role. Money plays a role. Earning returns plays a role that helps fund innovation and helps attract great people from tech and other industries to come here. I'd just like to open it up and say, hey, what excites you about the future for crypto? Like, what are the things, hey, like one or two things that you think are going to drive the next evolution of the industry? Is there going to be technology? Is there going to be certain regulatory developments? So I'll just throw it out there from me. I think if I look at .com and the boom, and in the late 90s and early 2000s, we were talking about e-commerce. We were talking about, hey, people are going to start buying stuff on their computer. In the future, people will watch things on their mobile. In 1998, early 2000s, you were like, you are dreaming. We had ADSL, dial-up broadband. The internet was slow. But then in 2007, 2008, the Palm Pilot wasn't cool. The iPhone was developed. And then look who we are. All the stuff we talked about then is happening. So today we're talking about, hey, we're going to live in the metaverse. Then you put on that thing and you think this is actually a pretty crappy experience. But are we just early? So I'm going to open it up. What's going to excite you? What's going to drive the industry in the next phase?
I'm really excited by the prospect of a lot of the stuff that we're used to doing off chain happening on chain. So right now, if you and by the way, I want to recognize that all of the companies that are represented here on the stage are not startups, and we're a startup. So I'm very humbled to be among great people from great companies. But I think the problem that exists with exchanges and all this counterparty risk and can be solved by using on-chain infrastructure. And I think the reality is this on-chain, we call it DeFi, and there's other terms, but DeFi is still a pretty advanced game to play. You need to, I have referred clients to Coinhako because they're like, oh, what is MetaMask? And I need to write down these 12 words. And I'll let you guess the age of these people. But it's tough to figure out crypto if you're brand new. If you're in crypto for a while, it's fine. It makes sense. And you can ape into, some yield farm. But the ability to have, I guess, number one, the UX that's simple enough that allows people to start. The connectivity that companies like ConsenSys are helping to build to bring fiat on-ramps into the on-chain world. If you have money in your bank account and you want to fund your MetaMask and you don't have anything else set up, that's still a pain point today. So I think having an on-chain venue where you can do all of these things, get an exchange-like interface, trade, obviously copy trading, Alpha Impact is a great resource, and do all those things on chain, I think that's going to be really exciting. And I think ultimately trust is another innovation that we haven't quite figured out as an industry. I think everyone here is one of the good ones. But, there's still lots of companies out there that people do trust that maybe they shouldn't. So ultimately that's a journey that takes time.
Thank you. Timothy.
Yeah, I'm always excited about the innovation that's happening in this space, right? But in terms of what really excites me going forward, it's really like Hayden mentioned, right? Building a product that tomorrow's user is able to use, right? Tomorrow's user may be your traditional trader who purchases agros from Africa and transports them to Vietnam to sell, right? How do we enable this next generation of users to come in and use crypto or use cryptocurrencies as what it was meant to be, right? Initially by Satoshi, right? Which is a payments network, right? So when I see institutions coming to me, and I don't mean your traditional, your DeFi traders or your crypto exchanges coming to me, but rather small startups, right, or small companies, SMEs that are in marketing, they are in consulting, they are traders who require a bank account or a crypto custody platform like ours, in order to transfer or to pay their suppliers or to pay their vendors in a very Web 2 way, right? That is what really excites me, and that is what I think would drive the next wave of adoption. And that is also why we think that regulation is important in this space to protect this group of users.
Okay.
Just my 2 cents. I'm not exactly a visionary. If I were, I would be the CEO of my company. But I think there are some very, very, very fundamental concerns, if solved, and they're very, very pertinent to custody, right? If solved, based on my conversations with institutional players, mainstream players, if solved, we'll see the floodgates open, right? And that's important. You can't deny that proper institutional money coming in to support the space is very relevant. So all this centers around safety and security, like I said before. To a lot of the people I've spoken to, the current potential rewards of having a large allocation into crypto from their portfolio is just not worth the risk, right? The risk of your service provider blowing up, you lose your money. The risk of losing your keys, you lose your money. the risk, the personal risk of the CIO of a family office having to mandate investments into crypto and losing that money, it just doesn't make sense. So how do we get them on board? It's no longer just an intellectual exercise. It's no longer just about, when is adoption going to peak, or what is this technology, is it commercially viable, or valuations. It's an existential concern. Right, so until we can solve this existential concern, until we can lay it to rest, it's going to be very difficult. Having said that, I am very aware of, what are we talking about? Green shoots. Yeah, I'm still optimistic, right? I mean, Timothy's here. There are multiple solution providers who are, whether it's on-chain, whether it's off-exchange, multiple solution providers who are trying to, tackle these issues around, for example, counterparty risk. Like I mentioned, off-exchange trading in escrow, you have maybe potentially more comprehensive insurance policies, more transparency through more thorough audits and regulatory requirements. All of this, it's building up. It's a slow grind, and we get impatient when we sit here, but we understand. I'm looking at my clients and I listen to them and I say, I understand. I feel you. If only you could go faster.
Man, spring, yeah. So here's the bad good news, right? So the technology in the space actually still has a lot of room to grow, which means there is a lot of exciting things up ahead. So personally, when I moved from my Web2 cloud business and came to the space, I really thought it was ready. It's time for it to boom, and there will be a lot of use cases. But then, of course, as you look into the technology, you understand there is a lot of things that still need to be built. So to go to the model of also like segregating a stack crypto into boxes, you can really think about it with two segments. There is applications, there is companies building applications, and there is infrastructure and things that are required to run this application. Very much like when you're holding this iPhone today, it's only running because there is great database, there is great battery inside, there is great 4G, 5G working in it. And so when I look at the space now between the applications, and these are probably the more exciting things when you hear about a nice NFT collection or a nice game that came out or a nice exchange that you can trade on, those are applications for us to use as users. But then for them to have zero friction and have that frustration and risk removed when users, whether retail or institutions, interact with it, there is a whole bunch of companies working on the infrastructure side. So some of the terms that you may have heard about, for example, is scalability solutions. Everybody's talking about the ZK technology. Everybody's talking about optimistic rollups. And so without going into the details of it, the goal of all of these projects is to make it very, very fast for us to transact on blockchain and very cheap. Then there is a whole innovation happening around account abstraction. And what are the account abstraction and these wallets that you can build? The whole point of it also is to make it as easy for my parents to sign up with their phone number and then buy something with their credit card from the blockchain. There will be no gas fees. There will be no, waiting and seed phrase and everything like that. If they forget the password of their login, they can call me and then I can actually unlock them. That's something called social recovery. So there is a lot of things that are being happening right now on the infrastructure layer that is making it so, for me as a user, I see something, I click, I buy, and I use it in my game or in my metaverse or to send money to my parents to another country. And this is really where there is a lot of innovation happening. There is a lot of exciting companies. Here's where I'll chill some of the stuff that we do at ConsenSys. There is mainly two big things. Actually, three big things maybe if there is some gaming people here. First of all, we have launched a testnet for a ZK rollup called Linea. So this is essentially an Ethereum-based chain that allows applications to run faster, cheaper, and developers to deploy without having to worry about some complexities that Ethereum has. Now this chain is now in testnet. You can go and play around with it. You can maybe test some application with some fake money, still a bit sophisticated. But the goal is that later this year, we will have this chain launched for the public. There will be some great use cases and applications running on it. And this brings me to the second exciting thing on the MetaMask is that we are building MetaMask, the wallet that you all know, as a tool that will actually have everything that you need so you don't need to go to Coinhako. So there is a lot of work being done on the on-ramp, for example. We have great integrations here happening in Asia in particular. Like a couple of months ago, you can use the, in India, that is the UTI. It's like a system for transferring money. You can on-ramp with that. In Thailand, you can use prompt pay to on-ramp. There is few actually ways for communities that are actually in need of crypto and technology to really bring their cash money into their wallet. We are building bridging, so you don't have to worry about moving assets from blockchain A to blockchain B. It should be built in. We're building tools for NFT trading. We'll probably have soon some tools for you to do some sort of yield generation or some investment without having to go through complexities of DeFi. And so all of these integrated with a highly scalable L2 chain, we really believe that it will bring a lot of use cases and a lot of possibilities into the next year. And if you are technical, I invite you to participate today in testing it and playing around with it. If you are more on the use case and application building, I invite you also to start thinking about what can I build with a blockchain that does not require me to manage seed phrases, and I don't have to worry about gas fees, and I just want my users to have transaction and real digital ownership. So this is really where I see the future happening, and if there is when there is a spring in a couple of months, things like this will power it, hopefully.
Yes. I'm just saying, do we have time for audience questions? Do we have a infrastructure set up for audience questions, or not really? Or we do? Well, maybe we don't. So in that case, sorry, Hayden will.
Sure. You made an interesting comment. The spring will come in a few months, and I think we should. The title of this talk is Signs of Spring Emerging from Yet Another Crypto Winter. So I will share my, I don't want to call it a prediction, but I'll share some thoughts about where we are in the market cycle. And this is not investment advice. I'm not an investment advisor, just to be clear on that. But I think ultimately what the world has gone through over the past few years is we had a lot of liquidity injected into the system during the era of COVID, and that arguably went on too long. So that pushed up asset prices, and so the Fed has been the one that's been raising interest rates, which has been hurting asset prices. Those interest rates are pretty much over. There might be one more, but most models that I'm looking at show that will start to decrease around the end of the year as things start to break. So it stands to follow that asset prices should start to recover. And if you look at past economic cycles, the economy keeps crashing while the stock market recovers. The stock market is the first thing to bottom and the first thing to start recovering. And what happens in the stock market happens in crypto. So I think I can't tell anyone else to do, but what I have been doing is taking a long-term view of crypto assets and actually using my cash to buy more. If you're willing to hold for 1, 2, 3 years, well, I won't tell you what to do, but I personally am willing to hold for 1, 2, or 3 years, and I have the view that these assets are going to increase in value. And obviously, Alpha Impact is a great resource for people who are maybe don't want to do it themselves. And we're available for people to come and see what top traders are doing. You can even copy them from your account. So yeah, that's my perspective.
Very interesting. Well, I guess from Fintonia's perspective, we see a few things. We see technology development, ZK rollups, the infrastructure, just like 3G and other things, and broadband enabled e-commerce, right? So I think we see the technology driving applications and use, which then will drive value. And I think the other thing we see driving things are regulations. And I think the more regulations, more clarity, then people know how to work. And we're already seeing large institutions beginning to move in, whether that's Mura, Standard Chartered, Goldman, etc. And I think that will only increase. Are we in spring yet?
One more thing, actually. I'm surprised that we didn't talk about it, right? But then also it's important to look outside of crypto and blockchain because we live in a connected world. So there is interesting things happening outside that could potentially also contribute. Everybody spoke about AI, right, over the last couple of months. What's your tagline? AI is powerful, but 99% of people are not using it to its full potential. So that's one thing. The other thing is obviously it's interesting to see what Apple has announced, like yesterday, about the goggles or whatnot. It's not for everybody, but it has actually potential that can contribute to this metaverse and digital world. So these are, again, infrastructure. These are not applications, these are infrastructure and tooling. Now you have a device that you can visualize your digital assets better, or you can interact with them better. What use cases will that bring? And so whether we like it or not, there will be companies actually experimenting. There will be interesting things that will rally the users and the investors to go behind it. And that's essentially how economic growth happens, by unlocking new use cases. And as our technology, blockchain, matures, but also these other technologies mature and go to the mass user adoption, it will be necessarily, I see, a big impact on crypto prices, if that's something that you're looking into.
Well, definitely. Yeah, definitely. Well, just in closing then, we'll have one more question for the panels to share. Like, if you had to start today and build a digital assets company, what would you build and where would you base it?
Oh, well, that's hard to answer that question. I would build a non-custodial social trading platform, and I would base it in Singapore. Really great ecosystem to be a part of, great partners, great regulators, and that's my view.
Consistent, at least. Yes. Yeah.
I won't stray from Coinhako. I would rebuild Coinhako again and keep it in Singapore.
Okay. Can we have any controversy on this panel? Marouen.
Well, my main reason why I joined crypto and blockchain essentially is there is some social problems that are there to solve. So I was born and raised in Africa, right? Our needs there are very different from the needs of an average American consumer or Singapore or Hong Kong. So obviously a lot of investors and holders are from these developed countries, but then the people who need this technology the most actually are not in these countries. And so to build a solution for either remittance or payment or people's custody of assets, or creating an alternative to some failing governments and failing economic system, I would probably build my platform in those countries to be closer to the users, understand what they need. And regulation is a big topic, of course, and so I don't have an answer to that. But really, it's more about the user demand and being closer to the adoption source. We are fortunate to be in these developed countries like Singapore that allows us to innovate and have a regulatory framework. But also it's important to realize that crypto is actually meant for helping other people who need it a bit more. And so if you are to build something, those are great places to look and start at.
I think I will still build something related to custody, right? And it will be something very close to what we have at Cactus Custody right now. I think in terms of custody, it really forms the base infrastructure in which all institutional activity, or even in the future retail activity, can happen on, right? Whether or not a custodial solution ultimately is full custodial, where you do not hold your private keys, or something that's self-custodial, right, like Hayden mentioned. These are, to me, non-competing products, right? These are complementary products. These are products that would serve different types of users within the community. If users of crypto do not have a way to securely store their digital assets and do not have a way to mitigate the risk of holding digital assets, then I think we would struggle in adoption, right? So I think that building the custody infrastructure layer would be important, and it's one of the key driving factors for crypto going forward.
Interesting.
What about you, Adrian?
Well, similar to, I guess, what Marouen mentioned, I mean, I co-founded a couple of fintech companies, one digital lending business in the Philippines and in Vietnam, and one a credit scoring company using alternative data. And the purpose of those companies was to help people who are underserved and banked, because the typical cost-to-income ratio of a financial institution is 60% plus. A typical cost-to-income ratio for a decentralized smart contract-based protocol is less than 10%. And when you have high costs, so we're licensed and we serve rich people and institutions. That's our license. And so we give people 100 pages of disclaimers, which they won't read, but cost me lawyers and a whole bunch of costs for people to sign before they can invest with us. That's not really protecting the consumer. And if you think about the average Joe on the street, it doesn't help them. So I believe if I was to do something again, I would actually try and use blockchain technology to reduce the cost for people to save, to transfer money to their families. Kind of what like the original idea for Bitcoin, right? So, unfortunately, though, we live in a regulated world, so I don't actually know where I would do that because it's not easy. But I do think that is a solution for financial services. And to be fair, in Singapore, they're doing all these different kind of experiments, Project Guardian, other things to try and use blockchain technology for reducing costs and making efficiency. But I think that's been a great panel. I'd like to round of applause for my panelists here today. So thank you very much coming in early for the first session.